are watching Notepad. I'm your host, Ibrahim Sani. Today's show is brought to you by Bursa Malaysia. We speak about the issues surrounding the markets right now, how it impacts the institutional investors as well as retail investors, as well as take an overall look into how Bursa as an entity drives forward the capital markets of Malaysia. Joining me, of course, is the CEO of Bursa Malaysia, Datuk Muhamad Swift himself. So, Datuk, let's take a quick look into 2020. How has it been for Bursa and how has it been for the equities in the country?
Thanks, Ibrahim. It's been an interesting period. Clearly, we've had a change of government. We had a low point in the middle of March. Markets came off. We had the pandemic. Clearly, the impact of the MCO, where business stopped, was then reflected in the market. And then we saw this new emergence of the retail investor, the domestic investor, and we saw the market rebound. I think what's a very interesting theme is the re-emergence of the retail sector, which we've not had for some 10 years, if not longer.
The thing that I want to remind myself all the time is that performance of the stock market is not reflective of the economy. But it does give a window into the kind of situation that is happening in the country. How do you balance the issue of where the country is heading in terms of the economy versus how people are reacting towards markets right now?
I think when we look at the market, there's probably two elements. Market is long-term anticipation. It's an expectation of future earnings. People save. There are a number of different types of investors. There's short-term investors, medium-term investors, longer-term investors. Now, your short-term investor is your headline investor, the one that you'd see trading in and out. You have medium-term investors who have a 1 month, 3 month view of the market. And then you have long-term investors such as our GLICs, KWSP, QOP, and so on. Now, when we look at the market, I think what we've seen is there has been, when you look at the market, you see the long-term earnings, and that's why there's been this suggestion, if to use the foreign parlance, the disconnect between Main Street and Wall Street. The market is doing better than the economy, but the market is responding, or the stock market in particular, is responding to an expectation of the recovery of the economy. And I think that's fundamental. Now, as we go forward, of course, who can predict the future? But Malaysia went into the pandemic with strong fundamentals. Banks are strong. It's very different from previous crises that we've had. Say, for example, the financial crisis previously. That was driven by the financial sector. This is a real pandemic. It is a worldwide phenomenon. And there has been some, as we look, we've seen from the trough in March, April, we've seen the economy begin to rebound. We can see economic activity. I think the market is really looking for is to see where earnings are going to be. Yeah,
which is what we all know is going to be bad overall, except for some of the sectors, for instance, the healthcare sector, for instance. But generally speaking, we are better off compared to other markets around the world. Which begs to the question of, when you were mentioning just now, there's a lot of types of investors, for instance. And we've seen a lot of CDS openings, account openings in the past few months, hence indicating there's going to be a lot more retail investors now than before. So what types of challenges and crises that they're going through right now, and what types of opportunities that we can actually outline for those that are currently watching this show at home? What would be some of the ideas that you can share with us in order for us to give a good idea of how retail investors, for instance, can manage the situation right now?
Education, informed decision making. I can't stress it enough, Ibrahim. We launched Bursa Academy. I think there are those that trade on, if you like, momentum, but we always want people to make informed decisions as we deploy our capital. Now, clearly one of the attractions, as we see interest rates have fallen, is where do you look for yield? And people have looked to the market for yield. That's fine. But it needs to be a wise, or if you like, an informed decision. Make a decision about where you wish to be, the capital you wish to deploy, and how much risk you wish to take. Just because you read about it in a blog doesn't mean it's true. Ask the questions. I mean, there's always that theme. If something is too good, it is too good. That being said, the fundamentals of the market are coming back. We see great liquidity. We see a depth of the market we've not previously seen. I think the key as we then look at the retail investment space is we have new investors. CDS account openings are up. How do we give the new investor enough knowledge to make the right decision? At the exchange, we spend a great deal of our time looking at activity, how the markets are performing, the trading patterns, while also ensuring that the information provided to investors is appropriate and transparent.
One of the biggest things that the exchange has been trying to do is, of course, to grow the retail space. One thing led to another, the retail space is growing. Do you think that you would perhaps list some of Bursa's plans and efforts to further grow the retail space right now?
I think as we look at the retail space, we've seen it grow. So it's ease of transaction, ease of business. We've seen the amount of online trading increase to some 79% of all trades. So that was in some ways driven by the pandemic, the MCO. People couldn't get out. Now that makes the market more efficient. So there's that piece. The other, to say that retail suddenly blossom is perhaps not taking full cognizance of all the hard work that has been going on for a number of years between brokers and ourselves, with outreach programs, explaining, educating, particularly on types of products that are available, what to look for, and just introducing equities and different types of products on the equities market as possible opportunities for investment. And so if, as you then go forward, there is a culmination of events which in some ways is, we've seen greater liquidity because of the interest rate drop. There's been some discussion about the moratorium. That liquidity is then flowed into the market.
And this is, of course, an ongoing effort that is being currently done by both the exchange as well as all the participants right now in the market. What would be some of the telling things that you have observed in the past few months that that you might want to share with the people right now? Is it more, are people more interested in learning or educating themselves, or is it more of them relying on, I don't know, Twitter handle accounts, blogs, and unverifiable information sources? What would be some of the things that you've seen right now?
Well, I think you've hit the nail on the head. There's all types of trends happening. We have the emergence of investing clubs. Again, people need to ask the question and make due inquiry. You see that the market has grown, retail average daily volume has grown 128% period to period. From last year, we would be trending around about 400 million a day. Now we're doing 912. That is a tremendous surge. So now we then have a look at, so what does that mean to retail investors? Clearly there's a lot more liquidity. But in that same regard, we're seeing as we look at, because at the exchange, and I'm not sure most investors know, we actually see every trade. At the back end of you trade with your broker, it goes through the system, of course it comes to the exchange. We have computer software that is analysing and having a look for how accounts are being conducted and what's going on. And what we can see is retail investors are very different from those perhaps a decade ago. They're better informed.
Oh, okay.
Their behaviour is more akin to institutional investors. So there has been an emergence of a more, I wouldn't say more professional, I don't think, a more informed retail investor, which gets back to my previous point about the education process that brokers and ourselves have been working together over this period of time. So if you look at it thematically, emergence of a new investor, a new type of retail investor, or a stronger, more informed retail investor, because information is more available. I think that's fundamental.
Right.
Then I think the other theme when we start looking at the emergence of trends is we also look at how much margin, loan margins have been given for trading. And what we've seen, period on period, the growth in margin facilities for share trading is single digit compared to an increase in trading of nearly 128%. So it is quite healthy. So the investing we're seeing today is not credit driven, but is real cash. And that gives us comfort. Now, I think the real key as we go forward is then to see how everyone's very concerned about the impact of earnings, how will the market respond, will it overreact? And at the exchange, working very closely with the Securities Commission, we put in different types of preemptive measures. For example, the temporary suspension of short selling, measures designed to provide confidence to investors. Now, of course, it's temporary, but as the market normalises, a number of these interventions will be wound back as appropriate.
Okay. We'll take a short break before we continue our conversation with Datuk Umar of Bursa Malaysia. Don't go anywhere. Thanks for staying on with us. We are with Datuk Umar of Bursa Malaysia. Datuk, let's talk a little bit about Bursa's core offerings and core products that you can share with us that might be attractive for investors.
I think, think of it this way. We are the marketplace. So on the marketplace, what do we have? Of course, everyone knows us very well for equities. So we have Mainboard, Ace Market, Leap Market. But these are equities. On the other hand, we had a record level of trading in derivatives, which is listed our other asset, which is Bursa Malaysia Derivatives, which we can proudly say has the most liquid, highly traded palm oil contract in the world. In fact, at BMD, as we like to call it, we are the price maker for the world in this asset space. Derivatives promotes or provokes different reactions. Derivatives. You lose money on derivatives. They're highly speculative, potentially. But we prefer to think of derivatives and what we do in, say, with the palm oil complex is very much as a hedging tool to remove risk. So derivatives have the ability to remove risk for investors. You could look at the FKLI contract, which is based on our market. So depending on your view of the market, you can actually avail yourself to this contract to begin to remove risk. So I think it's important to think when you look at our core offerings, so that there's this space around derivatives. We also have a number of ETFs, exchange traded funds. Now ETFs in many ways look very similar to the mutual funds that all of us invest in, that we're familiar with. But on the exchange, the costs of entry and exit are less. So they're very efficient. So if we compare ETFs in other markets, they have a much larger share of the market that they enjoy here. So I would suggest to investors, please do log on to Bursa Marketplace, have a look at the products available, have a look at the different attributes of the products that are available, and consider what's right for your appetite. It's because at the end of the day, high yield, high risk. So we're all very familiar, fixed deposit, very safe, low dividend, low coupon, and that continuum. So as the riskier the investment, the more yield one should commensurately get. So I think as we look, I do encourage investors to avail yourself Bursa Marketplace. It is a one-stop shop. You can educate yourself. It will bring you through to Bursa Academy, where we actually have short courses online to show different products. Now, as we get back to the products on offering, so we have ETFs, we have warrants, calls and puts. We can't do it justice in the time we have on air. And again, I do encourage investors to get online and gain knowledge.
The idea, of course, on all this, right, is still trying to invest sustainably, trying to invest responsibly, and the whole global movement of sustainable and responsible investing has now gathered ground. It started off with ESG, Sharia, but now everybody has coalesced and said, all this is under bigger umbrella of SRI. Do you feel that this is a real thing, no longer a trend? Do you feel that investors are really looking for value, but through SRI investing?
Yeah, I think if we look at the pandemic, companies that were strong are now suffering. I'm talking about worldwide phenomenon. I'm not really focusing on the Malaysian market. We've seen supply chains challenged. Sustainability is fundamental. When we look at the market, again, we get back to that theme I was talking about. Are you trading for today, medium term, long term? The market in many ways is providing capital for the long term.
Mm-hmm.
Therefore, when we invest, we should be looking for companies that give superior long-term performance. And when we engage institutional investors, it is a theme, SRI. When we invest for the future, we want to see the robustness around that earnings stream. And a short-term outlook is not sustainable.
Mm-hmm.
And because institutional investors are beginning to vote with their investing dollars, you're going to see that becomes it's a very real thing, and that's what's going to attract people to the market. When dollars are moved, investing behaviour will drive corporate behaviour.
Mm.
And sustainability has become not a hygiene, it is a needed factor for for example, BlackRock will no longer invest in brown projects.
Mm.
We hear those terms like stranded assets and so on.
Mm.
So sustainable investments are the future. They are not necessarily the future, they are now. It is what we're looking for. And I think that there's another piece as we look at sustainable. It's also ethical investments. At the exchange, 77% of our listed companies are Sharia compliant. And when we look at Malaysia, we've always been at the forefront of Islamic development, of financial Sharia compliant products. And that's one of the things that I think we're going to really be looking at the exchange and working with all parts of the ecosystem. That we've seen, we were at the forefront, Sukuk, so on, and Sharia compliant product. We have a Sharia compliant ETF. I think we need to take that space back and remain that leading light.
It's sort of like lost its flavor over the past few years. That Suku space, that Islamic ETFs. Do you feel that through SRI we can actually redominate this space the way we did for the Islamic capital markets?
I think there is an analogy between the two product lines. Ethical products and SRI. The reach is not that great, although there will be some SRI products or ESG related products that were not ethical in nature, but that's a given. But it provides we need to be mindful of it because it's such a large investment class and is getting stronger. We can actually tap it. Now, when we look at the market, the exchange, assets listed on the exchange, it is a secondary market. So let's take a step back. So where does it sit? People come to the stock market to raise capital, to invest, to grow their businesses, create jobs, pay taxes, pay dividends, and do it again. It's a virtuous cycle. And what we're now doing is we're taking that cycle and we overlay an ethical portion to it. I think that's where we need to be.
Fantastic. One more short break before we continue our conversation with Datuk Umar of Bursa. Don't go anywhere. Thanks for staying on with us. We are still with Datuk Umar Swift of Bursa Malaysia. Datuk, let's talk a little bit about the agenda, the motive behind your existence and the planning that you have for this year, leading towards Q4 and perhaps into 2021.
Thanks, Ibrahim. I think the key thing at the moment when we talk about 2020 is, of course, the pandemic, market performance, making sure people are confident and doing everything we can to... We had a period where trading was approximately, we nearly reached 28 billion shares traded on a day. Is that sustainable? It's high. We want to manage it carefully and ensure that people are comfortable with trading levels. I think when you look at the exchange, why do we exist? I mean, what is the role of Bursa? Bursa is the marketplace. More importantly, we're an orderly marketplace. When you trade on Bursa, if you sell, you will receive your consideration. If you buy, you will receive your shares. Number one responsibility. I think the other responsibility, of course, for us is to help facilitate and grow the marketplace or the capital market. And we work with SC in that role. And then I think the third piece, of course, is we are a business and we generate a profit. Now, moving on to the second piece, I think for us as 2020, it's about the capital market. It's about ensuring systems are robust, doing the needful in that space. But as we move into 2021, we've seen the emergence of digital exchanges. A lot of talk, a lot of excitement. Ethereum, Ripple, Bitcoin. Where does Bursa sit with this? Well, these are, if you like, these are coins. They're actually mediums of exchange which are now traded. We have a slightly different view of the exchange. We're here to facilitate growth and provide capital. So as during the course of the last 12 months, we've seen the Securities Commission has published rules around initial exchange offerings. We've seen the emergence of 3 DACs. We've also, for some period of time, we've had P2P, we've had ECF. It's all about raising capital to do business, create jobs, all those good things. And at the exchange, we feel we can do a little bit more. We can help. And so as we look at it in our mind, we want to be the marketplace, and we want to extend the marketplace from equities into exchange-traded bonds. There is a piece, if you like, around the democratization of investing. Now, I know that's a mouthful, but if you are a private banking client for a bank, you get interesting products. They're not available to you and I. Well, they might be available to you, but I'm not a private banking client.
No, hang on. I would like to say, might be available for you, not to me.
So, all joking aside, but that's true. And there's not. It's because it's about distribution, platform costs.
Yeah, of course.
It's just how it is.
Yeah.
So I would like to bring those kinds of products to the exchange. So that when I was talking about ETF, that's what we're talking about. I want the interesting products to be available to everyone. Financial inclusion. Now, when we talk about financial inclusion, of course, those of us that have an EPF account, government servants with QOP, you are a part of the exchange. You are investing. In fact, you're investing in lots of different asset classes as well, because
the nature of those funds
are
diversify.
Yeah, that's it. Now, I think the key thing when we look at it is when you look at the development of the market, you have, when we start our business, if you're lucky enough, mum and dad might lend you a little bit of money to get you up and running. Or you find funds. You then avail yourself to an angel investor. You have this continuum of investment. We want to facilitate that.
But those would be in the private sphere, wouldn't it? From angel investors to VCs to PEs, and then they go to you guys for listing. That's the idea.
True. We want to move. If you like, we positioning ourselves as the platform, the regulated platform. We are not a manufacturer of product. We invite people to create product that is interesting to investors, that allows, well, with product means it could be companies. Alternatively, it's ETF, so people can save. So it's a way of saving. And so we just focus on the business cycle, private space, P2P. P2Ps also have a secondary market. You subscribe to ECF, equity crowdfunding.
Crowdfunding, yeah.
Once you've subscribed, there's no secondary market. We want to provide that secondary market. So as we go forward and we're looking at it, what is the role of Bursa in this space? We believe we can support and we can allow people to be more efficient as that trusted business partner, as the exchange.
These are fantastic, interesting and exciting kind of developments that you guys are trying to embark on. But I would imagine there would be a lot of hurdles that you need to cross, regulation of course, but I think the more tricky challenge that you guys need to navigate is of course market understanding, participants' understanding of these kind of outcomes that you are targeting. Do you feel that the market is able to be sophisticated enough to learn these kind of products once they are on the shelves? Do you think that there's going to be a lot more outreach that you guys have to do to speak to investors out there?
Yeah, I think it gets back to that central theme of outreach, the work we do with brokers today, what we see with Bursa Academy, online learning. Now, I think that the key piece is, as we move into different asset classes, is we have to arm people with knowledge. And that's why we do have Bursa Marketplace. We have these various platforms. But as you quite rightly said, it's the chicken and the egg. Great product brings investors. Investors bring great product. Where does that start? So for us at the exchange, we are going to work very hard to create that investing pool. How do we create new investing pool? Through knowledge. What's the risk appetite? How do you declare? I have a vision where today we talk about sophisticated investors, it's by asset or earnings. I want it to be through knowledge, where we go online, we acquire knowledge. Yes, there will be a short test to prove that you have acquired the knowledge, and then eventually you will be a sophisticated investor. And so that way we have confidence, as the whole marketplace has confidence, that we know what that our marketplace is informed and making appropriate decisions for them. It's all about empowerment.
And you are empowering, of course. There's a lot of investor education tools that are there, and I'm pretty sure the people are actually quite interested to learn more. But before we end this interview, I just want to get your idea of how this pandemic has changed the mood of investing moving forward. I mean, this is really, really substantive. A few weeks ago, I spoke to the managing partner of McKinsey, and he basically underlines the fact that this is a crisis unlike any other. Even during World War II, we don't see as many deaths as we've seen in COVID-19. And the Asian financial crisis and the global financial crisis pales in comparison to the kind of economic compression that we've seen for Malaysia for this year, neighboring countries, developed and emerging markets. It's just bad all around. Do you feel that we have enough enough gas in the tank to actually push forward for rejuvenating the economy in the near term? Do you feel that the whole idea of how we perceive the philosophy of investing has changed permanently moving forward?
Big question.
Save the big for last. Yeah.
I think clearly, who am I to argue with McKinsey? It's true. It is. No. This will be a longer answer than that. It is a game changer. It's fundamental. It gets back to that theme, sustainable, responsible investing. That's what drives the new thought process. There's been, we see a great deal of liquidity in the market today, and that's reflected in low interest rates. Where do you get your return on investment? Is it property? What's the impact on rental because of social distancing? Work from anywhere? We still don't know. There are imponderables. And so what we used to take as given is no longer fact. There has been an evolution. And so we have to actually ensure that as we look, investors are looking at the stock market, but we have to make sure they're informed, that they're given information to make the right decision. But what we've also seen is an emerging trend around SRI. Sustainability and the need for sustainability has been one of the really key So when you look at the nature of investing or the emergence of a new investor class, so emergence of new investors is, if you like, retail investors coming up strongly. When you look around investing themes, it's about sustainability. What is sustainable going forward? How do we demonstrate sustainability? So at the exchange, we're encouraging more disclosure to share. We have great companies. So share what you're doing in the sustainability space so investors know that you are sustainable, that you are addressing your inherent risks. And so that's become, if you like, two themes. One, the emergence of the retail investor class, or the re-emergence, I should say, and the strengthening of sustainable investing as a theme, but not just as a theme, as a requirement by large investors. And when large investors vote where they're investing ringgit and dollars and so on, the market will then respond.
That's a great way to end, a great place to end as well. That was our conversation with Datuk Muhamad Umar Swift, the CEO of Bursa Malaysia. If you've missed any part of this interview, just head on to AstroAwani.com, look for Notepad over there. You can also go to bursamarketplace.com. I highly urge you to learn more of all the investor education tools that can be found there. That's it from me for this particular episode. Until next time.